Hello everyone, this is Juan Sarmiento and today is Friday, April the 21st. I have a couple of candidates we're going to look at. Okay, these are JP Morgan and ISRG. That is, let me just type it, ISRG. Okay, and you can see that intuitive surgical after earnings, which came beating expectations, the stock went up and hit a new high. So that makes it for a great candidate for this type of trading. JP Morgan did something similar. Notice also that the volatility has dropped. It's now green. You should know how to get this chart. If not, please ask me and I'll be happy to share how to do that. I did that in the past, but I can do that again. Demonstrate how to make this chart so that you have the red and the green color. Green color means it's a good candidate for the Gini trade. Let's take JP Morgan, and here we go. Also green, you can see the volatility is here at the all-time low for this, at least for this year. You know, it's very, very low, the volatility. So that makes it an excellent candidate for trading the Gini trade. Okay, you should know by now that I have this spreadsheet that I use for evaluating the candidates. Okay, you can copy the trade, put it here, and you can see the price, suggested price, and I have created that here. Let's go first with the ISRG. And I have created the trade here in my Analyze tab, and I can copy that, open it, the price is here, okay? Let's copy that and take it to my spreadsheet so you can always go back to this for reference, okay? The price is 45.8, which means two of these shares, let's type here 45.8, is the price adequate times, let's say, times 200, and that's the price, 91.60. That's adequate. That's about 10% of my account. You can put details here. How many I'm selling? I'm selling 2 and buying 4. These are the front month options. You can put the date here. It says May 26, so we can enter here 5/26 for my date, okay? And the July 21st, yeah, that's the correct date. And again, we are selling a straddle front month, and we're going to sell 2 straddles rather, and we're buying 4. You can put the strike price. That's pretty obvious here. It says $2.99, $2.95. Oops, $2.95. That's how I fill up my sheet. Now let's go and look at the earnings. Okay, if you look at the chart here, and if you don't see that here, please ask the broker to tell you how to do this. They would explain how to enter this. You can see the earnings. It was 0.93 estimate, 1.23 actual. So we're going to put that here. Okay, so the expected was 0.93 and the actual, so just a second here, 0.93 and the actual was 1.23. So we beat expectations, so the company beat expectations by 32.3% or 0.3 cents. And that's a great candidate. Anything above 10% of earnings beat is a good candidate. Why? Because it's a stock that is going to move rather strongly from here on. Now, the volatility skew. This compares the volatility of the front month compared to the back month. The front month meaning the ones that I'm selling versus the back month, the options that I'm buying. So let's go to the Analyze tab, and you can see here my options price, my options volatility, and we're going to enter it here, volatility. Okay, front back month, you can see it's the first 30.69, 24.4. Okay, you can see that here in the bottom right corner of your screen. Okay, and now we're going to do the same for the front month, 28.32 versus 22.14. So it calculates the averages of calls versus puts, averages the two of them. It tells you what is the back month volatility versus the front month volatility, subtract, and if it is less than 3%, there is a skew that is against me, but it is reasonable. It's not more than 3. And usually that is the case. We don't want to go more than 3% volatility points. Now, the liquidity is the price of the stock, mid versus natural. And why is that liquidity? Well, if the spread is minimal, small, that means that it's easy to get in and get out of the trade. So let's go over here, create duplicate, and you see the mid and the natural. Okay, that looks like a bit of a spread. So let's enter it here. The mid is 46.85 versus the natural 49.5, and that gives me 54. It says do not trade. It's not liquid enough. But I'm gonna just keep reminding you that that's okay, provided that you have a reason for enter the trade, and I think you do. The earning speed is quite significant, and the volatility is really low right now. So the current IV percentile, that means is the volatility, the IV is near the 52-week low, and you can see that in the chart easily. Okay, it's at the 52-week low. So, but just to get the number, go to the trade tab and slide down until you say current IV percentile 0. So it's at the very bottom. So that makes it, I'd say 3 out of 4 items are correct. So I say, yeah, let's enter the trade, understanding that it's going to be a little hard to get in and get out, but it's certainly worth it. The stock is going to move strongly in either direction, and I'm happy with that. Okay, so now I create this trade, create duplicate. Let's open this, by the way. Okay, create duplicate, and then confirm and send, and then you can see the price here. Okay, we can actually say multiple accounts, and I'll show you when you say all accounts. We're going to enter it in the account ending in 15. But here, say create duplicate order, confirm and send. Okay, so it says multiple accounts, and by saying multiple accounts, it shows you it's very easy to increase the quantity, and there it is. That's about 10% of my account, and I'm happy with that. So we can enter it for $9,410, and that's 10% of my account. So let's send that off and wait until it gets filled. In the meantime, let's do the same with my trade in JP Morgan. First the chart. Okay, let's do that same procedure. First, go to JP Morgan here. That's my trade, and I'm gonna quickly go through this, the cost. I'm not gonna do every detail, all right? You know, you can follow the other trade. Here it's important that we do this though. Price 18.61, and we can do something like 5, 4. Yeah, 5 or 4. Let's if we did 5 times 100. Yeah, that's quite all right. So we can do 5 lots. In the other one we did 2. This is 5 lots. Means we're going to have 5 shorts straddles and 10 long straddles. Okay, you fulfill the rest. Okay, this number of straddles and the expiration, if you will. If you need this spreadsheet, just communicate with me. Put a message in the comments below, and I will provide you with that. Okay, let's go to the earnings. And the earnings here, you can see that they beat expectations, didn't they? They were expecting 3 3.414 and they got 4.1. So 3.414, 3.414, and the actual was 4.1, and that's 20%. That's fantastic, good to trade. All right, let's go now with the volatility. Go to the Analyze tab, and here you have the numbers. Again, at the bottom right corner of your screen, you have the volatility for the longs and the shorts. We're going to average those. 25.7, 19.05, and 21.95, 15.92, and that's a little too high. Okay, so I don't like that. I don't like that. You are motivated based on this, but is it a good idea? Perhaps not. Let's see what the other items tell us. If I say create duplicate order, and we're going to enter here the liquidity, 18.53 versus 18.85, and that is acceptable. It's liquid enough. Yeah, JP Morgan is a blue chip stock, is heavily traded, so yeah, we wouldn't expect any problem. And the current IV percentile, we know that it's at the bottom, but just to verify, go to the trade tab, scroll down and see the current IV percentile, that's 0. Okay, so I don't like this volatility skew, it's too much against me. Let's verify that. Double check your numbers, make sure that is correct. 19.23, 21.96, yes. 15 point. This is the puts here are a little too low. Okay. What if we change the expiration of the front month options? Would that help? Analyze. Trade. You can duplicate your order here. And now I'm going to change. See if the June the 2nd is any better. Not by much. What if we did a week before? Okay, so instead of May, we go May 19. No, the same. So I decide not to trade it. I just think that the volatility skew is too much against me. I don't want that. Okay, so I decide not to do it after all. Okay. All right, let's go through our trades here, and all I'm going to do is I'm going to go through the list here and see what needs adjustment. Okay, so May, if it is the short month options, is it ready to expire 1 week from now, or is it expiring? Anyway, obviously Adobe is not one of them. Let's move on to AXP. Okay, AXP, obviously, I have here a covered call because I got assigned, and I told you that I would do this because the stock has gone so much down. I simply keep my 100 shares, and I suggest you take a look at my new series, the covered call, because I'm explaining a lot about what I'm doing with these covered calls. This is the only one I'm going to keep just as a demonstration purposes, but you can see that the stock collapsed pretty much. And now I am betting that the stock will go up, and I keep my shares, and I want to invest for the long term with that, and I do my options. But take a look. I'm going to put the link below to my new two new videos on covered call. Okay, and then that would explain a lot what I'm trying to do here. And I'm going to keep it as a demonstration for demonstration purposes until we have some candidates in the other videos on covered call. Then I will remove this, but you can certainly keep this covered call in this account. It's not going to hurt you in any way. Let's go to BP. BP is expiring May 5th, and we are April 21, so no rush on that. if you want, verify how many days to expiration, 14. So next week we will adjust that. CRM, this stock we have, I was assigned the shares, so I had to cover my shares with the 2 puts that I had at 150, and now it's, no, at 210 actually, and now it's gone. So the shares took away my actual trade, and now it's gone. Now you can see that I have 150 puts. That's probably nothing there. Yeah, 7 cents times 4, and then this call is worth something. Okay, 154. So let's close this. Okay, let's start with the call and then the puts. And do the same with these 4 puts. Okay, so this is how eventually the account there gone. We don't need to have those lottery tickets there. I just as soon close that. Okay, let's move on to FedEx. In FedEx we have May 19, plenty of time for it to work. Google, I think it's Google. Yeah, this is right now we're dealing with this stock that is due to earnings next week. So I think I want to close it. I have profits on that, or I don't know. Let's take a look. Yeah, I did the rollover on the call side. Or better yet, let's go to the monitor tab, look at Google here, and you can see that I had a profit of 420, and I don't want to see it go to waste. Okay, I just as soon wait for the earnings, and if there is a bump, then we enter a new trade. I want to close this position now. You have this April puts are due to expire today, and they will expire, but the other 3 options are not. Okay, so let's close this put first, because it is 1 cent. Okay, and that's going to get in the way of the other trades. So let's close that. And in the meantime, I'm going to put this in order to close this. Okay, let's do this properly. Go to the Add Simulated Trades, and we're going to go to May 19 first. And we're going to buy the call. Just click on the ask, because we're buying it back, and we're not buying 4 of them. Okay, and then here we have the long ones. We're going to sell that one. So press the control key so it gets added to my current trade simulation. Let's click bid 1, 2, 3, 4, 5, 6, 7, 8. Okay, and same for the put side. We are selling it, so we're going to bid it 1, 2, 3, 4, 5, 6, 7, 8. Okay, so that will close my position, but we need that put close first. It's interesting that it's not filling. Let's add 2 cents. Surely it should fill. Okay. Tell you what, let's wait until the end of the show and to do that. Let's move on to, surely it will get filled. I'm offering 2 pennies. Anyway, let's go to ISRG is the one we just entered, Oracle. Let's go to the Analyze tab, Risk Graph. And we have May 5th. Again, 2 weeks to expiration, we can wait. PANW. Okay, this is interesting because I put You remember that I had entered the call. Now I'm gonna roll over the add the put. Now the put is expiring today, this April, so, and it's way out. So this is what we're gonna do. Analyze. Let's pretend. Let's do this call side. Analyze closing. Just so that we can get an order here. Then I could change it to do short, and instead of call, we need to do put. And make sure you do 2 of them, not 3. Okay, and you can see that because of this one here, which is worthless, this should be 0. Same thing, it's 2 cents, but that's going to end in just a few hours. And I don't anticipate this particular stock to go to 185. I might be wrong, of course, anything could happen, but I'm confident that it won't happen. So I wouldn't do this if it was yesterday, 1 day to expiration. I do it on the day of expiration and confident that we are way far away from the strike price. So I'm going to sell the May puts. And that way we get $670 back. Okay? There it is, filled. You can always close this put for 1 penny. You're buying it back, so it costs a little money, but it's junk, and you're paying $3.30 to do that closing. Okay, let's move to STX, which has been declining very strongly, and look at that. Okay, now we have 8 puts long, 10, all at 70. Okay, you can add puts here, May puts, or better yet, you can roll down. You can also roll down 1 put to a strike price that is closer to today's expiration, today's strike price, to current price. Let me reset this. Reset slices so we can see that the current price is 56. So I can roll down 1 put. Analyze rolling. And we can sell 1. We are selling 1 of my puts at 170 and buying 1. Same expiration, but a lower strike price, let's say 55, which is closer to today's price. And we're gonna get a credit for this, okay? And so let's say June 16. There. And so I'm getting $11.40 times 100. Okay. So if I do that, my deltas go from 256 to 200. Oh, well, we can actually do 2 of those. How about 3? Okay, 3, then it's less than 100. I'm happy with that, happier, because it's equivalent to owning 100 shares short, having 100 shares short. Okay, let's confirm and send. Okay, it should fill shortly. Okay, so you know what I'm going to do. I'm waiting for that Google. That's going to fill. All my trades are here. Okay, that was my STX, the vertical. Good, we got some money out of that one. This PAMW is not needed, but yeah, let's cancel that. We don't need that. The Google, we need to cancel it because I don't want to leave 400 shares of Google there out in the open. The stock is trading at 106 and my puts are 100. So, well, is it gonna go within the next few hours to below 100? Not likely. So the problem is if I leave this hanging separately and the other options, the closing trade fills, then I have 4 short puts, and that's equivalent to 400 shares times 100. That's $40,000 Do I have enough? No, I don't have enough buying power for that. Okay, let's go to Google here. And this is what I want to close. And you see how I end up with this? And my buying power effect is 40,000, and I don't have enough option buying power to do that. And so this order, if I were to do that, it's not going to be accepted because my buying power will be below 0. So I can't do that. Okay. All right. So let's see. As I sit here, my credit is increasing. You see that? This is locked. Means I have one locked and one open, so I can see how my price changes. Okay. All right. I'm going to go and try to get this filled. I wouldn't, but in real life, I probably wouldn't be paying $14 to close that, to be honest. I would just wait a little after the market. So that's what I'm going to do, a little closer to the closing, and then fill my position, closing my Google trade. Okay, that's all for today. So remember to take a look at my cover call new videos, which are linked in the discussion below. And thank you very much for joining me, and see you next time. Bye-bye.